welcome to a special Mad Money from One Market in San Francisco. Welcome to Cramerica. Other people, my friends, I'm just trying to make you some money. My job is not just to entertain, but to educate you. So call me at 1-800-743-CBC. Tweet me at Jim Cramer. Time to pardon Jay Powell. The poor guy's not a criminal. He doesn't belong in prison. I know you laugh, but today we learned that the Justice Department has launched a criminal investigation of Powell for something he said in Congress about the renovation of the Federal Reserve headquarters, which is coming in over budget. Of course, Powell says that the president's doing this because the Fed isn't cutting interest rates fast enough. The Justice Department will never admit that. But I think Powell's got a point. While I'm not a fan of politically motivated prosecutions, at least Trump takes monetary policy seriously. If you're going to play games with the Justice Department, I can think of worse reasons than getting interest rates lower for the American people. If this is such a big deal, though, how come the stock market barely seemed to react? Dow gaining 86 points. S&P advanced 0.16%. NASDAQ climbed 0.26%. Oh, it's simple. This is Wall Street betting that it's not going to happen. Even some Republican senators are pushing back against the Jay Powell prosecution. Besides, what's the point of going after this guy whose term ends in 4 months? And how often do you go after the customer when it's the contractor that runs over budget? Again, I'm with Powell here. But I got to say this about President Trump. Usually when he does something that could terrify the markets, he changes his mind. Wall Street freaked out last April when the initial Liberation Day tariff rates were announced. But then most of those tariffs ended up coming in at much, much lower levels. This time, money managers are betting that Trump won't follow through because they think following through would be nuts and very bad for stocks, which we know from post-Liberation Day, Trump doesn't want to happen. However, I still want a presidential pardon for Jay Powell, because as any lawyer will tell you, a grand jury would indict a ham sandwich. You don't want to end up with a situation where the Fed chief actually gets prosecuted, because that would end the very idea of Fed independence or Justice Department independence for that matter. Still, nobody believes the Justice Department will actually go that far. This isn't the only news about presidential intervention in the economy that the market seems to be ignoring. President Trump has also decided that credit card companies will have to cap rates at 10% per year. Okay, of course, Congress would need to pass actual legislation to make that happen. But I'm sure the president will be happy to call in the heads of the banks and try to browbeat them into following his orders. This is another where Wall Street just doesn't seem to care because it's too over the top. Because the bank stocks actually opened down and spent the rest of the day rallying. If we actually cap credit card interest rates at 10%, the real victims would probably be the millions of Americans who no longer be able to borrow money. Some people are bad credit risks, and these companies simply won't lend to any of them unless they can get exorbitant interest rates. I don't want to be the bull who cried bear, but you'd just be mandating a crash if these companies stop lending. Better simply print a lot of money. Here's the bottom line. The market's a harsh taskmaster. If it thinks you can be outflanked and outsmarted, it's not going to do your bidding. And that's what happened today. The market just doesn't believe Jay Powell will be prosecuted or the credit card companies will get hit with an interest rate cap. I'm betting the market's right. Let's take some calls. Let's go to Andy in New York. Andy.
Hi, Jim.
Andy, what's up?
Thank you for taking my call. Okay,
my pleasure.
Thank you for taking my call. I would like your opinion on ticker symbol SHOP, Shopify.
All right. Now, Shopify, lately under a little pressure. Look, I think it's wrong. To me, Shopify is a buy, and today's actual rally is the right way to go. I'd go with that rally. Shopify goes higher. Today, we saw the market being a harsh taskmaster. If it thinks you can be outsmarted, it's not going to do your bidding. Mad Money tonight, I'm kicking off our coverage of the J.P. Morgan Healthcare Conference with conversation with some of the biggest names in the space, including exclusives with Novo Nordisk, Medtronic, Pfizer, and Bausch & Lomb. You're not going to want to miss any of it, so stay with Cramer.
Don't miss a second of Mad Money. Follow at Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.